Welcome to XM.com for today's daily market comment by Haralambos Pisuros. I'm Cristina Marujos. The dollar traded lower against most of the other major currencies on Friday and continued its retreat today, even as U.S. President Biden and congressional Republican McCarthy found common ground over the weekend to avert a government default by agreeing to suspend the $31.4 trillion debt ceiling until 2025. Now, the two leaders need to convince both chambers of Congress to accept the accord, and they must pass the deal before June 5th, as this is the date when the U.S. will no longer be able to pay its bills, according to Treasury Secretary Yellen. Although the dollar took a breather on Friday and early today, the weakened consensus is nothing but a positive development, as it diminishes concerns about economic instability and thereby allows investors to add to bets regarding a summer hike by the Fed. According to Fed Fund futures, they are now assigning a 63% probability for a quarter-point hike in June, and they are almost certain that a hike will be delivered by July. The dramatic change in market pricing came after investors started paying attention to hawkish rhetoric by Fed officials, with the consensus being that it is too early to start discussing interest rate cuts. The dollar could continue outperforming most of its major peers for a while longer, especially if this week's jobs data come in strong and allow traders to scale back more basis points worth of cuts. However, arguing for a full-scale bullish reversal is still premature. For the greenback to extend its recovery and head for a bullish reversal, Fed officials may need to also start pouring cold water on expectations of rate reductions for early next year. Wall Street traded in the green on Friday, with all three of its main indices gaining 1% or more. The tech-heavy Nasdaq was the main gainer as chip stocks surged for a second day on optimism about artificial intelligence. Marvell Technology Incorporated surged more than 30% after it estimated that its annual AI revenue would double, while NVIDIA Incorporated added another 2.54% after skyrocketing almost 25% on Thursday due to stellar forecasts. However, with the Nasdaq adding more than 37% since its October bottom, the risks of a potential correction soon are likely increasing. What's more, a debt ceiling deal could be very positive in the very short run, as it dismisses the risk of a destabilizing economy due to a shutdown, but a potential liquidity squeeze from Treasury issuance to bolster cash could result in higher yields and perhaps hurt equities. Thank you for watching the Daily Market Comment at XM.com. Have a great week.